This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. oil refiners aim to run at up to 94% of a total 17.9 million barrels per day processing capacity this quarter, according to company forecasts and analysts, driven in part by expectations of seasonal travel demand. Strong prices and demand since late 2021 have encouraged refiners to run above 90% of their processing capacity, and in a sign that they expect fuel demand to remain high. 2 refiners have added units or enhanced their output, reviving a once routine practice that disappeared amid COVID-19 closures. This quarter is traditionally one of the year's hottest for demand as companies build gasoline and jet fuel output for the summer vacation season.
Oil prices fell for a second day on Wednesday after a surprise rise in U.S. crude inventories stoked demand concerns on the heels of weaker-than-expected economic data from the United States and China, the world's 2 biggest oil consumers. Brent crude futures slipped 49 cents, or 0.7%, to $74.42 a barrel. U.S. West Texas Intermediate crude was down 55 cents, or 0.8%, to $70.84 at 0657 GMT. Crude prices remain heavy as energy traders just can't shake off global demand concerns. It doesn't matter how upbeat everyone is for China's second half of the year, the current situation is too disappointing, said Edward Moyer, an analyst at Oanda.
Moving on to the top news in the energy sector.
Brazilian state oil company Petrobras approved a new fuel pricing policy for gasoline and diesel that will sharply lower costs for motorists, it announced on Tuesday, ditching a more market-based policy in favor of greater flexibility to smooth price swings. President Luiz Inácio Lula da Silva celebrated the new policy for Brazil's millions of motorists in a post on social media later on Tuesday, declaring it a victory for the people. The new pricing system scraps a so-called fuel import parity policy that more closely aligned prices at the pump with the oil market and exchange rates. Lula, as the leftist leader is known, had promised to change that to make fuel cheaper.
Rural electric cooperatives, utilities, and other energy providers will soon be able to apply for nearly $11 billion in grants and loans for clean energy projects, funded by the $430 billion Inflation Reduction Act signed into law last August, the Biden administration said on Tuesday. Expanding clean energy to rural communities is critical to meeting the administration's goal of net zero emissions by 2050, officials told reporters on a Monday press call. This is an exciting and an historic day and continues an ongoing effort to ensure that rural America is a full participant in the clean energy economy, said Agriculture Secretary Tom Vilsack on the call. Next, we have the top news in metal markets. Demand for aluminium has slumped in Europe and top consumer China in recent weeks amid a slowing global economy, raising the risk of further downside in prices, a conference heard on Tuesday. Benchmark aluminium on the London Metal Exchange has slid 16% since touching a $2,679.50 peak in January, was flat at $2,260 on Tuesday. Prices for the metal used in transport, construction and packaging hit their lowest since October 31 last week. It's clear from my recent travels in Europe that demand is very poor, particularly in the construction sector, said analyst at consultancy Crew, Ross Strawn. The situation has actually deteriorated in the last 6 to 8 weeks.
U.S. Commerce Secretary Gina Raimondo said on Tuesday the Biden administration was extremely focused on reaching a green steel arrangement with the European Union and other partners that disadvantages carbon-intensive steel from China and elsewhere. Raimondo told an American Iron and Steel Institute conference in Washington that she was fully committed to ensuring that Section 232 inches tariffs on global steel and aluminum imports, first imposed by the Trump administration, protect U.S. steelmakers and U.S. national security interests. The commerce chief said a green steel arrangement being negotiated by U.S. Trade Representative Catherine Tai will be a game changer for the industry's efforts to deal with Chinese excess steel manufacturing capacity.
We will now look at the top news in the agricultural sector.
Chicago soybeans slid on Wednesday to their lowest levels in more than 7 months, while corn eased as crop-friendly weather in parts of the U.S. Midwest and stiff export competition anchored prices. Wheat futures fell with focus on talks to renew the Black Sea grain export deal. The most active soybean contract on the Chicago Board of Trade was down 0.4% at $13.59 a bushel, as of 03:01 GMT, after dropping earlier in the session to its lowest since October 7 at $13.56 a bushel. Corn gave up 0.8% to $5.76 minus 1/2 a bushel, and wheat WV1 slid 0.6% to $6.43 minus 3/4 a bushel. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.